Good evening, everyone. Thank you for joining our webinar today. Hope every one of you are doing well. My name is Yongxuan from Philip Futures Marketing, and I will be the MC for today. During the webinar, if you have any question, do type them into the question box, and I will address the questions during the Q&A session at the end of the webinar. Before I introduce our speaker, please allow me to introduce our company. As usual, I will need to emphasize on our disclaimer where this presentation has not been reviewed by Securities Commission Malaysia and it is provided to you solely for general information and does not constitute any recommendation. And we are not liable for any losses arising based on this information. Investments are subject to investment rates. Therefore, you shall seek advice from qualified advisor before making any investment decision. Okay. So Philip Futures is a wholly owned subsidiary of Philip Capital Holdings, Sdn Bhd, and it has been incorporated on the 7th of October 1995. We have our headquarters in Kuala Lumpur and we have branches distributed across Malaysia, such as Kota Damansara, Malacca, Penang, Johor, Kuching, Cebu, and KK. Other than that, Philip Futures is a trading participant of Bursa Malaysia Derivatives Berhad, a clearing participant of Bursa Malaysia Derivatives Clearing, and also a holder of Capital Market Services License, also known as CMSL. And I would like to take this opportunity to extend our gratitude on behalf of my company, Philip Futures, to our clients. So without you, we are unable to achieve the awards. In 2021, we achieved 3 awards from Bursa Malaysia, which we were the first runner-up for the best overall derivatives, the best retail derivatives, and the best institutional derivatives trading participant. And our mother company, Philip Capital, has offices and branches over 15 different countries. And like we have it in Indonesia, Thailand, and the United States, and etc. as well. So for futures, we cover not only products in Malaysia, we also covered from different exchanges such as Singapore Exchange, CME, CBOT, NYMEX, and more. With our strength of global coverage, clients are able to trade both local and foreign products under the same platform. The products available for the futures, we have like interest rate, index, energy, agricultural, and metal. And for contract for difference, we have Bursa Malaysia, Nasdaq, NYSE, and US Indices CFD. So why do you choose Philip? First of all, we provide advisory service such as inquiries. Next, we also provide wide array of products for futures that enable clients to trade both local and foreign products. Other than that, we send out latest market news and commentaries to clients every day through email for references. Lastly, we have headquarters. Our headquarters have 24 hours of working and execution support. This is very important for clients who trade foreign futures, and also we have dealers who can assist to your inquiries anytime. And so no matter you are our client or not, we will offer free one-to-one coaching session, free seminars and webinars, and free online account opening. For free one-to-one coaching session, the key topics that we will be focusing are introduction to futures trading, product knowledge, platform coaching, and also charting system. The platform for futures trading in Philip Nova, which is commonly used by our clients to access to the global products. For the desktop version, is a web-based platform, and for the mobile version, you can trade using the Philip Nova application, which allows you to trade anywhere and anytime. You can scan to request a demo account now. And currently we have one ongoing promotion, which is to trade CME micro futures at only USD 250. The promotion period will be from 1st of May to 31st of July. And next, I would like to introduce to our speaker, which is Mr. Kenn. He joined Synergy Link Capital in 2018, and he specialized in the short to mid-term spread trading spanning across the equity index of commodities. So from 2013 to 17, Mr. Kenn served as an executive committee member of the Association of Financial and Commodity Traders. He also continues to facilitate for the FCTC, and after that was dissolved and converted into an informal trading community. So without further ado, let's invite our Mr. Kenn for our today's topic.
Okay, just give me a moment. Okay, and oops, why it doesn't go full screen? I'm sorry, just give me a moment. Huh, that's not good. Okay, I guess I just have to make do with this then, since the screen is not helping me. Okay, good evening, everyone. Thanks for joining us. As usual, we shall start with this disclaimer, which Yongxuan has already done a big bulk of it, so it saves a couple of seconds. But just take note that whatever I'm sharing tonight is basically in my private capacity, based on what I do and how I do. So always do your own due diligence and seek advice from financial advisor before you even put on any trades. Yeah. Okay. Right. This is also covered by Yongxuan. Do check out on my podcast earlier prior to this webinar. I've mentioned a little bit more about my trading journey. So what do you call just over here, what I want to highlight is that despite that you guys are probably in Malaysia, it's a bit cumbersome to come by Singapore, but I don't know, I mean, if you do, you're always welcome to join our trading community. And just basically click the Facebook link that is available on these slides, and then just sign up and follow us on Facebook. All right. From time to time, we do receive invites from brokers and exchanges for on-site events. So yeah, if you are free, just pop by. All right. Next, the agenda for tonight. I will tell you a little bit more about our company, ITS, Inspirante Trading Solution, and what we do per se. And then this, if you have attended my podcast, this part of it which will actually answer question number 3. Okay, and thereafter I will give you an overlook of the US markets, followed by risk management, which will also answer question number 4 of the podcast. Before I walk you through my trading tools, methodology, including an example of how I research for a simple trade setup. And last but not least, if time permits, we'll take a look at a live chart which you saw earlier on the first screen, and Q&A. Okay, just to recap for the benefit of those who has not looked through the or listening to the podcast, these are the questions I presented then. And I've already answered the first 2 questions during the podcast, so do check back. And now I shall answer question 3 and 4. Okay, about ITS, it is a spin-off from trading firm Synergy Link Capital, where I sit and trade on a daily basis. Okay, this ITS was set up 2 years ago to take care of the other businesses related to trading, except trading itself, of course, such as research, trading solution development, and education. Okay, we started this company because over the years we know of many successful traders retiring from the industry, and personally, I know even more traders falling off the cliff when the market dynamics and landscape change. Okay, because then I was serving the association, and then our membership keep dropping off, and then when I check back with them, yeah, that's basically the reason what happened. I mean, they just couldn't find a way to make money. Okay, so upon the request of the various stakeholder in the industry, we decided to offer our know-how with the objective of building a pool of professional traders. It's not going to be an easy task. It's very much an uphill task, because it's very different when you're talking about trading as a retail and trading professionally. Okay, so for the start, we because then this was set up 2 years ago, and as you know, 2 years ago the pandemic hits, and then we just can't go anywhere in person. So we started conducting webinar for exchanges and brokers, and hopefully we'll be doing some in-person sessions soon. Okay. And in addition to the webinars, of course, we also conducted professional trading workshop and mentoring programs. And our programs are actually conducted by active traders with vast knowledge and experience across various asset classes. Okay, we strive to nurture students and equip them with an ability to adapt, evolve, and stay relevant under different market conditions. And this is basically answering question number 3 earlier. Okay, we have conducted a couple of classes, both in Malaysia and Singapore, just prior to the COVID lockdown, fortunately. And we are proud to say that some of our students are doing very well today. Okay, we also write market commentary every fortnight for CME Group, titled Fresh from the Trading Room. We focus on key economics events across global markets and major asset classes. Feel free to subscribe for this free service. The link is just right below here. And in fact, today is the release of the latest report, so you might want to catch up on that. All right, next, let's do a quick overview of the current US market. Okay. Now, as you're trading US indices, the topic for today. So basically, let's cover these 4 indices that, of course, there are 4 of them, but we don't naturally trade all 4 of them, but every now and then, here and there. So this first one is, of course, the so-called the mother of blue chips, the 30 largest US company, Dow Jones Industrial Average. Okay, more than 50% of this index is covered by 3 sectors, namely the information technology, the healthcare, and the financials. As you can see from this chart, and in fact, all of you who have been trading the US indices would have realized and know by now, by the look of the chart, you know is on the retracing phase, or the bearish phase that is already been ongoing since the start of the year. The all-time high for Dow Jones was clocked in Jan 5th this year at 36,000, touching distance to 37,000, before it retraces back all the way down to 29, slightly below the 30,000, 29,600. Thereabout in just a couple of days back, last week actually. Okay, currently this is the only index that hasn't fall into the bear pit just yet. Okay, but year to date it is down about 16% from the all-time high, because last night there was a recovery of 2% as you see, but then okay, earlier I haven't flipped onto the current update, but by the afternoon, today afternoon, it has almost given back all its gain already of yesterday. Okay, and for those who uses the moving average as one of your indicators for trend identification, they are all nicely stacked up already. In fact, if you use the 50, 100, and 200 MA, you would have also noticed that the death clause, where the 50 cuts the 200 on the downward move, that was already done on the Women's Day this year, which is March the 8th. Okay, and thereafter there were two failed attempts to get back above the 200 MA in March and April. Okay, and there's another thing about this index that I do look out for is the what the US coined it as down Friday, down Monday, the DFDM. Okay, so basically it just shows that if you have a down Friday and the following Monday is another down market kind of thing. So it's just beginning to point towards a bearish sentiment, okay, over the weekend kind of things. And for Dow Jones, for up to this 2 weeks ago, I think 2 weeks ago, there were already 7 down Friday, down Monday. You can go back and count on a daily basis. 7 down Friday and 7 down Monday since the start of the year. I mean, it's like we are not done with June yet, but there's already 7 clocked in. That is something like out of 24 weeks, you're talking about almost 29%. That means 1/3 of it is bearish sentiment already. Okay, and then the recent down Friday, down Monday was one with gap open kind of thing. So I foresee, in fact, this current retracement could probably attempt to cover the first gap, which is there about the 32,000 region before any possible rollover as well going further down. So obviously, I mean, there's a lot of bearishness. Later on, as we go on, you would sense more and more bearish tone. And over here on this chart itself, if I could just bring out my spotlight. Okay, this lower chart here is basically the COT, which is the commitment of traders, where we read what the speculators and the hedgers are doing. The green are the speculators, the red is the hedgers. Excuse me. So as you can see that the speculators are all net short right now. It's under zero and it's all net short, while the hedgers were net long and still net long, but then is trimming their long. So the hedgers are also probably giving up hope on being bullish about these guys. All right. Next index we look at is, of course, the favorite of most traders. That is the E-Mini S&P. Okay, this is a large cap index. This is 500 of the counters, market cap weighted index. This has also gone down something like into the bear territory for sure. I mean, is down 21% as of last night after recovering 2. And the all-time high was in Jan 4th, as 4,800 region, and the low again was in June 16 last week at 3,600 region. Okay, the death cross itself was completed a week later than now, somewhere along March 14, and with only one failed attempt to get back above the 200. And for these guys, it has done 8 down Friday and 8 down Monday apart. Sorry. Okay, so it has one down Friday and Monday more than the Dow Jones. So if there's any indication, then this is not looking good. And also, those of you who are trading the US stocks and all that, you probably have heard of the stock market almanac, which is collations of all the hypotheses and the self-fulfilling prophecy. One of which is called the January barometers. Okay, what it does is there are 2 parts to this self-fulfilling prophecy. The first part is how S&P finished in the first 5 days of the year. And then the second part is how it finished the month of January. So of course, by looking at the chart itself, both have completed bearish. So this stock market almanac was first recorded somewhere, I think, if I'm not wrong, if I remember correctly, was the year I was born. It's back in 1967. And this January barometer has a decent 75% accuracy, at least for the full month of January, and then more than 80% accuracy if the first 5 days is traded negative. That means bearish from the start of the year. 5 days later, it closes bearish from the first day. So 80% pointing towards where the year is going to go. So which means a bearish, as you can see right now, it is doing what it has proven to do. Okay, if it's on a positive side, on the other hand, just for information, the year-end average gain for S&P can go about something like 13% for the full year. Okay, next we go into Nasdaq. Yeah, this is the what we call the tech heavy index. As most of you would have known, a big bulk of it is covered by the FANG, we call it the last time. People like the Facebook, the Apple, the Microsoft, the Google, and Nvidia, the kind of all the techie guys. Okay, and in fact, this guys is the most bearish among all of the four indexes. It has actually go more than 30% last week, before clawing back a bit, couple of percentage of yesterday close. And the dead cross itself has been done on March 1st, okay, slightly earlier, and with also one failed attempt to recover. Okay, so this retracement, if there is right now, probably pushing back to the low to mid 12,000 region. Okay, and the COT wise, the speculator, however, is actually net long. Okay, probably because of this big move down, and so naturally they can be very upbeat about the tech stocks, which is still driving all these current years of profitability. Okay. Okay, last but not least, we have the Russell 2000. Okay, and this one is for the small cap index. For the small cap, obviously 2000's component in there, largest being the healthcare sectors, followed by financial and industrial company. Okay, and the smallest sector is the utility, basically. And this fella has also been down something like almost 25% from all-time high, but the all-time high was done last year, November 8th. There about the 2400 region, before it falls into a low of 1641, also on June 16 last week. Yeah, and yesterday pullback is only a mere 1.7% of the lowest of the weakest of all the pullback. And this death cross is on the January 18, with no strength at all to attempt the 200 MA. It just never gets there. In fact, I think at best it goes to is probably the 100 MA. Okay. All right, let's take a look as the fundamental drivers of index prices. When we trade indices, we got to know what are the factors that will move the price of the indices. Okay, obviously we have the monetary policy, which is the FOMC release in terms of the interest rate, the money supply, and stuff like this. And then news. In fact, news and earnings are the common two, because then that happens almost every day. It can come about out of nowhere as well, except for the earning, of course, is a predetermined period on a monthly basis and a quarterly basis. The big ones are, of course, the quarterly earnings. And yeah, these two generally move the market quite a fair bit as well. Okay. Even social media. I mean, if you remember, Donald Trump likes to tweak, and then each tweak moves the market, kind of thing. So yeah, that can also happen. And then of course geopolitics. Later on we'll take a look at the current affair as well. And naturally we know what is bothering us right now is the Russia-Ukraine war. Okay, and then of course economic data such as the CPI, the GDP, the PPI, the PMI, the non-farm employment change, unemployment claim, etc., etc. So all this data does move the price as well. Okay, and of course, none other than speculator like us who could be scalping and swinging in and out of the market every now and then actively. So that, of course, sometimes the big boys will be able to push the price to some extent. Yeah. Okay, current affair. As I was saying earlier, okay, Russia-Ukraine war. Okay, not much need to be said. The missile are fired, the bullets are shot, and victims are there. No winners in war, but for whatever reason, there is a war going on right now. And then on top of this, obviously you have the Scandinavian countries, people like Finland, Sweden, suddenly talking about joining NATO. They are still attempting, not in yet, but very close now. Then the Western allies sending weapons to Ukraine, not helping the whole situation. Ukraine herself is joining EU and NATO, and so yeah, US slaps, or basically the whole Western world, about of Western world slaps sanction on Russia. And then you lo and behold, you get the logistic part issue coming into the play, the food supply side. I mean, Ukraine is a big exporter of sunflower oil. Then the Russian is good with wheats, their oil, their natural gas, and their fertilizer as well. So all these things, I mean, you cause sanction, and then this thing just cannot go, cannot be sold, and all that. Yeah, you're just keeping everybody at bay, and then yeah, it caused the hyperinflation that we are actually seeing right now. It's just the inflation doesn't caused by this war. In fact, it is already cooking there. But then this war and then the sanction and whatnot just give you another kick, and then yeah, the ball just fly. Okay, on top of that, then the countries around the world are banning exports of commodity, fueling an already inflationary environment because they need to protect their own economy. Okay, and of course we have the US-China tension, both in trades and military. I mean, the military side obviously is US has always been poking on Taiwan, and now recently the Solomon Island kind of things. So this is the never-ending story if you were to ask me. Okay, then we have the Sri Lanka default, running out of money due to decades of economic mismanagement, coupled with a hit from COVID to tourism and remittance, and yeah, plus all along they have been importing more than they are exporting. So naturally, it's only a matter of time that you run out of foreign currency reserve, and then you end up no money to buy stuff, and they are short of food, short of oil, short of medicines, and yeah, it's gonna be a horrible, horrible situation. And the rescue fund, I don't know. I mean, it could take months before it comes in. They already totally almost out of oil already. Then, of course, we have the central banks. As we know, these global central banks, except Bank of Japan, in a hurry to raise interest rate to in a desperate attempt to bring the soaring inflation under control. And of course, on the US side, they've already done 3 hike this year, adding something like 150 basis point, and the next one coming next month. According to CME Fed Watch tools, you can go to CME website. There's this Fed Watch, FEDWATCH, Fed Watch tools. 95, almost 96% of the market is pricing in a target range of a target rate of 225 to 250 in the next FOMC in about, I think it's 35 days time. Okay, on the 27th July, if I remember the date correctly, which is another 75 to 100 basis point hike. Okay. And right, the earning, as I mentioned earlier, okay, current affair, we just have wrapped up with Q1 earning. So the scorecard for US side is like 77% positive EPS surprises, of which 73% positive revenue surprise. But then there were only about 31 of them issuing positive EPS, earning per share guidance going forward. So even the companies are not looking quite healthy right now. Okay, and okay, pandemic. Okay, more or less we are done with COVID, but then what we were looking at is how China will manage, because they are still the only one with the zero COVID policy. The reason for this is that it's very disrupting to manufacturing and affecting the supply chain as well, because then, as you know, China is the global manufacturer, so a lot of things are not getting manufactured, so you get shortage of staff and things like that. And then once they lock down, it's zero COVID. So once they lock down, everybody cannot move. Everybody just freeze where they are, and so you can understand is how tough that will be. Okay, and also barring any more new virus outbreak, fortunately, the monkeypox hasn't caused much panic just yet. So let's see if this thing will kicks anything right. So now with this current kind of market condition, I mean, I would strongly suggest that we should stay light and be very agile. I mean, probably you want to do more intraday trade rather than trying to swing it or catch the falling knife and find the bottom, catch the bottom kind of thing to take a long or quick rebound kind of trade. So I won't look into that. Okay, anyway, this moving on, this is the contract spec. Okay, as I was saying, CME has launched already the micro E-Mini, and then earlier you heard from Yong Xuan that the Philip has a very good comrade for you guys to test run on this contract, which you should. I mean, is later on when you see, maybe there's something for you to go and test it out with. Okay, so basically among the four, as said, most trader will like the S&P 500. One obvious reason is the dollar per tick, dollar value per tick. Okay, it's 125 per contract. So each ticks a quarter points, you get 125. So which means every point move will get you $5, $5 US. So yeah, it's a little bit more meaty lah than the others. Obviously, the Russell also can get you the $5, but then Russell is CME is not the owner of Russell 2000 index, so the liquidity not too bad, is pretty good now. In fact, all of them are pretty good, even though it's not as liquid as S&P for sure. All right. Okay, risk management. Now we have come to answer the fourth question that I shown earlier. That is there a holy grail? Okay, and if you ask me, risk management is the holy grail. I will let me walk you through, and you will see why I say so. All right. Okay, first of all, trading is a probability business. Okay, we do not know for sure what chances of success the next trade has, even if we hold a view of what could happen next. All right, and especially when you are trading the outright. Okay, you need to be able to take the hit, HEAT, and then which means you get the whip by the volatility, and then the hit, HIT, which is simply means getting stopped out. Okay, and what you should never do is to pick up the habits of moving your stops. Okay, this is definitely a recipe for disaster. Okay, and next point is trading capital. Okay, profit is a function of capital. So to make money, you need money, right? Obviously, right? So you need to be adequately funded according to your trading objective, right? And then based on your capital amount, you can then set a risk capital per trade, which can be an amount or a percentage of your trading capital. Okay, this is important because where there may come a time when you get hit by a string of back-to-back losses. Okay, as Murphy Law says, anything that can go wrong will go wrong, right? Then you do a position sizing. Okay, this used to be quite challenging in the past with the standard lot size. Okay, for smaller account especially. but now CME has rolled out the minis and the micro contract that thus in turn gives traders the flexibility and opportunity to participate. Okay, and like all businesses, it is prudent to have a plan, a trade plan that helps to balance your emotion. Before triggering a trade, one needs to be comfortable with the entry, the exit, and your stop level based on your own study. Okay, next is emotion. Okay, we are all human, so you can't do away with the emotion. You're definitely bound to have it, but the best we can do is to learn to accept and manage our emotion. Okay, such as fear. Okay, this comes when you don't have a plan. Okay, fear of missing out and ended up chasing trades, or fear of losing profit and ended up taking profit too early. Okay, and then this will naturally leads to anger, which there are times when the market continue in your direction after you TP. I'm sure all of you have experienced that. Or when you get stopped out and then the market goes in your direction of trades, and or you are on a losing streak and you get angry. And so when such a thing happen, my advice is keep calm and carry on, because if you have a trade plan, you will be able to just follow your plan and just look for the next trade. What you don't want to do is revenge trading. Okay, trying to make back the money you have lost. Slow and steady, that's the way to go for this business. Okay, euphoria and greed both may come or both usually come after a winning streak. So you feel euphoric after several wins, and you you become complacent and trigger happy. Okay, soon after you feel that you can read the market, and then you want to size up to multiply your profit. Nothing wrong with that, no? As long as it is within your position limit and you can take care of the risk. Otherwise, you will end up over trading. Okay, and last but not least, discipline, passion, and patience. They are key to successful trading, but it takes time to cultivate and develop this virtue. Okay, discipline is doing what you need to be done, and that is plan your trade and trade your plan. Okay, and then the passion is for you to, if you're not passionate in what you're doing, usually it's difficult to go the distance. And trading is a no destination journey. Basically, is something that you will enjoy. Okay, next, a trader's daily checklist is also part of risk management. You got to keep abreast with these price drivers throughout the day. I mean, reading the news of for current affair, economics, geopolitics, which may have an impact on the market sentiment, and usually have lah. Okay, and I pay attention to those days with scheduled releases such as FOMC employment figures and whatnot. I actually do not participate in that session. Once there are these data releases, I don't really do it. Okay. And last but not least, I will also cross-check safe haven assets such as the US dollar, the Japanese yen, the Swiss franc, the precious metal, the bonds. This also sometimes gives you a heads up on the risk sentiment of the market participant. Of course, the list is not exhaustive, so expand and contract as you trade along. Okay, next I'll be showing you what's I have in my toolbox. Okay, we are half an hour in also something. Okay, we got to be quick. Okay, of course, the first and foremost is trading platform. Personally, I prefer one which allows for multiple chart with multiple time frame and with common studies. That's good enough. The basic one is actually okay. I use both hourly and daily chart for trend. Okay, and I trade either with the 15 or the 5 minutes, or sometimes I even trade on the hourly chart. Of course, the longer the time period, the wider is your stops, and yeah, you get the gist of it. Yeah. And of course, if you can get time and sales, it's a nice addition to read the flow. Basically, although it's not an easy thing to do, because then, especially S&P and all that, it is so liquid that the flow is so fast. There's no time to count how many lots was traded and things like that. But then basically just seeing the colors, the blue means the buying and then the red means the selling. So if the whole page of red after red after red, you know, I mean, the sentiment is bearish. Okay. Next, okay, these are some of the tools that I use. Excuse me. For example, I use indicators such as moving average. That means which is not presented here, but I usually use a simple moving average of 9 period for my trading, of course, for my trading. Later I'll tell you more about that. And support resistance in general. Okay, let me get the pointer. Okay, support resistance, pretty nice. And then of course you have price and chart patterns. Okay, the triangles, for example, and then the candlestick pattern, which is the this I pick out this particular few because then you will see it very often, and in lower time frame or higher time frame, you can actually spot them. On hindsight, okay, when you backtrack your chart, on hindsight, you'll be able to spot this. So if you study into it, and these are the things that is happening, and it roughly gives you a kind of setting in this kind of contract, how the player react and things like that. Okay, so I will not go through. You can actually Google on the web what are they and things like that. Of course, then some are bearish, some I gave both the bearish and the bullish kind of indications. Okay, as it states over here. Okay, later on when we look at the trades that I've done and the simple methodology that I'll be sharing, you can tell from it. Okay, and of course then of which I will trade on any one of these three scenario, like a consolidation range, where the range actually squeeze off to a very narrow price range, like over here. Okay, as you can see over here. Okay, and usually it means something. It means some kind of breakout that is happening. Okay, and then trend continuation, of course, then if you get things like this trend continuation, it goes. And then of course you want to look for trend reversal. Okay, basically you look for shooting stars and dojis and dark cloud cover, or even a bearish reversal. You get any indications of interim trend reversal. Okay, so all right, let's move next. Change this. Okay, now I will show you how I do a simple research for a tradable contract, and how I look for simple trade setup. Okay, and this actually apply to any contract that you wanted to trade, and you pick it up, any contract that you want to trade, you just do these steps and to find the ways that you can actually go about doing it. Okay, so for example, I use E-Mini. So what I do is I start by studying the past behavior over a certain period. Like for example, here I have the 24 May to 20th June, which is about a month period, about 20 trading days or so. Okay, and because I trade a lot of other contract, so I limit this period, and my days is basically a big bulk in the office. So I actually did this study with the what they call as you can see that E-Mini, of course, the chart doesn't look like this. It's a continuation kind of things, but you see it being broken up and all that. Is because I pull out 6 a.m. to 6 p.m., the period that I'm in the office, to look out for trade. So once you look at this, out of these 20 days, you probably can gather around half or 10 of them that are actually trendy. Okay, they are very trending in the day itself. So yeah, things like this. Once you spot a contract, you look into it and you can see trend. Okay, for outright traders, you only look for trend basically. So the trend is your friend, right? So you need contract that actually move in a certain behavior, certain manner that you can trade off it. Okay, and then once you find this, then you want to zoom into lower time frame to look for the trade setup with the tools that I presented earlier, like the reversal candlestick pattern, the support resistance, the continuations patterns kind of thing. So then you will be able to drill in and look at it. Okay, let's now drill into to this same chart, but this time now 15 minutes. Okay, I particularly picked this week 8, 9, 10, and 13. Okay, this is a scale issue, because then you have one that is traded at a lower range and one at a higher range. So because of the scale issue, it seems like it's fairly flat. But yes, it is still fairly flat for most of the time. This is 15 minutes. Okay, and if we drew into the particular day itself, you can see a difference. So it's a matter of perspective. If you change the scale, you will see a different thing. Now, this is the 9th of June. Okay, earlier you see the 9th of June, which is the second day, which is almost flat. But now if you drill in into still 15 minutes chart, okay, 15 minutes candle, per candle is 15 minutes. And you'll see a lot clearer, and there is a range that you can actually scout off it. Yeah, so like for example, this kind of range. Okay, later on I will talk on this as well. So of course, now it's on high side, it's very easy. I can tell you, okay, I can trade buy here, I can trade sell here, I can bid buy here, sell here, buy here, and I don't do anything here, then I buy here, and then yeah, that's the end of the day. I close my days. Voila, so many trade in a day. Of course not lah. It's not so simple lah. I'm sure most of you would have done that. But I have a simple setup for you to take a look later. Okay, or maybe I should might as well say it now since we're running out of time. Okay, if you look at this again, if you take notice of what I like I told you, I like those tight range, and then a big move is gonna come. Okay, so this one from the 6 a.m. open, okay, to the 8 a.m. these 2 hours, I see where is it gonna go. If it's stuck in a tight range, usually it means that there could be a move, okay, after 8, right? So, and lo and behold, and there is a move after 8. So what I mean is that you've identified the range within the first 2 hours. Okay, you can see in 5 minutes, you can see 15 minutes, because then there are more candles per period. So basically you would be able to see the pattern that it goes into a range and then it break off of obviously where do I get the trade, because it's at 8, right? You wait for the 8 o'clock candle to close, it still hasn't broken out of the range, because the range is here, the bottom is here. So this is still slightly below. So you probably catch your trade somewhere around the 41.13. Okay, this line here is 41.15. The end of this, the low of this candle is 41.15. So you probably catch the trade from this low after you break out. Okay, you take the trade. So like I said, your risk management, your stop has to be in place. Okay, so in this kind of instances, where will be your stop? Of course, very simple. Wherever the high, the nearest high you can find over here. And if this range is comfortable for your capital size, and then yeah, it's a trade good to go. Okay, so you just have to take it. Obviously, does the trade definitely works? Of course not. You just have to take it with the stop in place, and you have to take the hit and hit. Remember the two of them, yeah, because the next candle actually closed up pretty doji like, and rather bullish, right? So you may get frightened off, but then if you have your stop in place, it takes away your emotion. Anyway, I'm getting ready to get stopped out if it doesn't work. Okay, but if it works, then yeah, this is something that you can look at. Okay, and then TP range wise, yeah, is again your trade plan. Okay, usually what I do is I could trade very small range, because I'm trying to scalp. Like one box here is about 5 points. Okay, 5 points is about 20 ticks. 20 ticks times 5, that's $100. So for every box is $100. So if I have a stop of say $120, 1 for 1, okay, I'm ready to get out 120 as a stop. Okay, but maybe I should also take 120 for the profit itself. In fact, half an hour later, you already hit your TP. But if you have extra size, okay, you take one, you hold one, and see what happened. Okay, and one way to increase your profitability, your pursuit for better return, okay, obviously you want to trail your stops. Okay, once the trade goes in your favor, Okay, you from the stop that is originally here, you want to shift it to the next swing. Okay, next swing is basically you can also take this next candle as your next swing. So you literally minimize your losses as it goes. And then it goes here, you take out one, and then there's another next swing that comes up here, which naturally gives you the opportunity to bring your trail stop lower, which is more or less like your entry level already. So which means your next lot, technically you have nothing to lose anymore. At max, you just pay the comp basically for your second lot. Otherwise, you trade it down for better money, and it's up to you where you're gonna take your profit. Go with your plan. Okay. If not, if you leave your trade stop there, naturally it come back up and it will stop you out over there. Okay, over this candle because your trail stop is right up here, right? This one will naturally take you up, but as it goes, and then you see a reversal kind of situation going on here. Okay, like this one, there's a doji, but there was no reversal bullish candle going up. So it's not a reversal yet. Okay, it was a bearish candle instead. Whereas this one, you get a reversal. So maybe it's already an indication. Let's see. And the next one tells you, okay, I'm going down again. And then, oh no, I'm going back up again. Then, okay, like go ding dong like this, 45 minutes, 1 hour later, it's still there. Okay, you take your money and you go. You still have a bit more profit than getting stop out here. So this this kind of style will only comes to you when you get comfortable. Excuse me. When you get comfortable as you're trading it, as you practice and you do it a few rounds and things like that. And with micro E-Mini, I mean the lot size is very small, and you can just it's 125 per tick, so you can just test it out and get used to it. Okay. Okay, some trade going on. Okay, so this is one of which. Okay, let's take a look at another day that is on the 10. Excuse me. Okay, this on the 10 is pardon me. Okay, this was a day that goes nowhere. Okay, as you look at it, I mean, um, basically it's just been chopping around. But of course, if you look at it, the basic stuff still appear. Like for example, a nice doji. This kind of doji is definitely very nice. Open and close at the same price, with a higher punch up of the range before it closed back down. So it's pushing negative. But of course, the trade plan is to work out the 6 to 8 uh, range, which is the next candle is the close of the range 6 to 8. So this technically is not an entry signal. Okay, it wasn't the plan. So if you have taken this, yeah, you probably get filled on this on the next 15 minutes, and then you're naturally going to get stop out, or you will stop yourself out early to minimize your losses, because it's heading nowhere. It's not going down. The market is telling you it's not going down. It's just ding donging there. So sometimes if you take too long to actually move, you see, when the market want to move a certain direction, it will just move like this. For example, if you want to move, it will just go bing bang bang, just three four candles, and then it goes. So these are the kind of trade that we want. So when it start to ding dong, get out. I mean, don't waste time. Look for the next trade. Okay. And and beside this, you could also get like I said, the 8 o'clock, it fails. So once it failed, the pattern fail, you have to get out, of course. And then you get another range that breaks out. Okay, if you take this as a range, okay, you take this as a range, this is 10-15 or so. This is a candle that breaks out of this range. Okay, you draw triangle whatsoever, doesn't matter. Once you break out of the range, you want to go long, because then that's a new trade plan. It's breaking out of range or breaking out of a pattern. Okay, and this one, yeah, if you place your stop nice and good, it goes here, half an hour later still go nowhere, but your stop is still in place, and then bam, you get rewarded, and naturally your stop can come up here, take some profit off, trail your stop up here, and wait and see what happened. The next tick still go, you want to see what happened, and then it comes like a reversal pattern, a bearish engulfing, or dark cloud cover, whatever you call it, is bearish enough, and the next one that is bearish again. Okay, it's time, instead of waiting here, I take my profit, I go, something like this. Okay, and it can be repeated throughout the day. Okay, let's see the next one. Okay, this is the 13. Okay, 13 is obviously a nice one actually, as you see from the first screen of the 4 days, it looks very flat, but again here it's nice and decent. Okay, same thing, 6 to 8, the trade plan that I was telling you, the 6 to 8, 8 o'clock is here, this bar, you trade below the break of the range. The range is right here at the top, and then 8 o'clock close at this point here. So you sell from here, you get your money. Okay, and same thing, trail stop from here comes down to here, and then if you want, after this reversal going up, you can find another stop level. If not, then this probably can tell you, okay, I'm not happy with it. I have pretty good money there. Whatever I have, take and go. So this is what I meant by you want to do um, intraday. You want to scalp. You want to be quick. You want to be light. You want to nimble. You want to be agile and things like that for this current period, because it's very challenging. Of course, we can also say is that the big trend is down. So you look for short. So you have a short, you can hold your short. Sure, you can. Okay, if you use trail stop, same thing from here. Okay, you can trail up to here. By the time it does this, you are trail up to here. Okay, from the point of your entry, which is here, okay, you're basically break even. You're back to your entry stop level. So your stop is at your entry level. You got nothing to lose, and you sit and you have a time to wait for it to happen. Yeah, sure. Then you get something decent. You get couple more hundred more, or if you add your lot size, then yeah, you may even go into the thousand. It's possible. And these are all Asian hour, mind you. Okay, so I don't do the US hour, okay, because I need to sleep. My day actually start at 4 a.m. every morning, so I actually need to sleep early. Okay, so Asian hour, not too bad. Okay, here's another example I took last year. I'm afraid you got to give me a second. I have a trade view. Okay, no problem. All right. Um, this is a trade that I've done last year. Okay, look at this 6 to 8. This is the 6 to 8 line. This is the 8. Okay, 6 to 8 tight range, and then it break out. Okay, my stop was here. It break out. It does a small move up, then it goes down again. My trail stop goes all the way down. Okay, I'm already in the money, nothing to lose anymore. Then as it goes, okay, here of course it's up to you. Okay, and it goes into range, okay, but the flow is still there, as except for this last one, which may give me a scare, because then the bullishness is engulfing basically. So I was prepared to get out, but okay, I trail my stop right above this fella, okay, and then see what happened, and then bam, voila, this was wonderful. This is a bonus day, as I call it. Okay, the afternoon has something like 240 to 280 ticks. The morning is about 60 to 70 ticks. So on the whole, it's 300 over ticks. That's quite handsome amount. Okay, and if you can remember which day was this, okay, this is the day after FOMC, 7 July. Okay, after FOMC, the next day, this is what happened. So again, you don't have to stay awake till 2 a.m. to wait for FOMC and then to make a trade there. And later on, you see a couple more slides which show you the volatility during FOMC days. I'm sure those who have traded would have known it. Okay, whip one way up and whip one way down, you get short both sides, and you go long, you're dead. You go short, you're dead. That kind of thing. I won't do that. So I rather sleep well, wake up tomorrow morning, and 8 o'clock I see where you go, and then I take the trade from there. Slow and comfortable, and it's Asian hours. The Americans are all sleeping already. Even the Europeans are still sleeping, haven't wake up yet. Okay, things like this. All right, next, yeah, this is another FOMC day in May itself. Okay, see the FOMC day. Okay lah, if you are good with it, and then you get the long, fine. But then again, same thing, 6 o'clock to 8 o'clock, 6 to 8, sorry, 6 to 8 somewhere here. It goes into range again. But because of the preceding trend is up, so I was actually looking for to go up. But then as it goes, it stretch, and it's a little too long. Usually I would just give up on the trade. So, but because it's so tight range, so I was like, okay, I park both sides. I mean, a stop buy and a stop sell, see whichever hits. Okay, if your platform can use OCO, that's even better. One cancel the order. So, and thank goodness I waited, and then somewhere in the afternoon when the Europeans start to come in and things like that, yeah, then the trade start to move, and then it dies off again, and then of course 6 o'clock I'm going home already. So obviously I missed this big move. Those of you who has time, yeah, remember, if you do trades like this, always move your trail stop. Okay, use your trail stop to lock your position, to protect your capital basically. Don't let any trade turn into losers. Okay, you can go at entry level that you only pay commission, and commission is cheap. Okay, so relatively cheap. I can't say it's cheap right now. It's relatively cheap. So you want to protect your capital and then also protect your profit. Don't let it turn into losers. That in the long term is not healthy for your account. Okay, so another day. Okay, if you remember, this one is just happened only, and this is the FOMC in June, just this month. Okay, 15-minute chart, you can go 5 minutes, it's the same. So where is the 6 to 8? Okay, this one's a bit tiny. Let me see. 6 to 8 is here. This is 8. This is 4. Okay, this is 4. 6 to 8, it actually goes up as well. Okay, and it did actually go up. So obviously, I have taken the long trade. Okay, and naturally I get stopped out. Okay, over here, and because it come all the way back, I get stopped out. Okay, and I would like to take the long, but then I was hesitant, and so I waited. Because why? I traded a few FOMC and it's usually quite bearish. Of course, I was lucky in that sense, because there are many FOMC that goes nowhere or just heading up, especially last year kind of thing. So it's only this year that, because the big trend is down, so to go long is a bit tough. Okay, so naturally you want to stay on the short side. So I didn't actually go for long again after canal hit. Okay, so this time around I wait for short, but unfortunately this one don't really have the tools, the pattern, the candlestick. There's no doji or whatsoever. The only clearer one is probably here, which shows you a bearish engulfing, because this down bar is so big that it engulfed almost 3 candle before it. There's 45 minutes taken out in 115 minutes bar. So this is bearish enough lah. So I say, okay, if you break this low range, I go in. Okay, so I waited lah, and then yep, it does break, and then whoop, nice, decent trade. Okay, I didn't this was I think this is 4 o'clock thereabout, but of course I didn't take that much. I wasn't that greedy, although I would like to, but as I trade other stuff, so things like this can happen. Sometimes you just don't take the whole bulk of it. But if you guys are good and have time for it, yeah, why not? Money is there to be for the picking. Okay, and okay, so much of profit, right? Trading, where got so easy one, right? So there are bound to be losses that you have to accept. This is another one of the FOMC in March. Okay, this is the one that it goes nowhere, and then bam, it start to go off and start to go long. Okay, so that's why when it comes to June, I was wanting to go long because March was going long, but I still choose not and stay with short. Okay, because the trend is down. But then look at this. If you are in it, and if you don't know how to turn, and this one has a lot of telltale sign. Okay, you have the okay, where's the 8 o'clock? 8 o'clock, 6 to 8. Okay, you have the 8 o'clock breakdown, which fail. Okay, obviously you get stopped out, and then you have the small what they call reversal pattern, where with a long-legged doji, and then it seems to be there, but maybe you're waiting for the big move and it never come back up. You probably make a little bit, or you scratch it, or you may get stopped out if you have a trail stop here. And then this one, another reversal pattern perhaps. Okay, so you look at it and then it doesn't go again. Another reversal pattern here. Okay, this three fella here. Okay, so there are a lot of patterns there, but it just doesn't continue. It happens. Okay, things like this can go. So there are 4 more FOMC to go. Next one is, of course, 28 July. You have the 22nd September, 3rd November, and 15 December. So watch out on this day. These are the date. If I pull out the date correctly, these are the day after, or not after lah. For our time is after. The FOMC is at 2 a.m. Our time is this 28, the day, the Asian hour day. Okay, where the US are sleeping. Okay, watch out on this, and look out for the 6 to 8. Okay, very quickly, let's look at a live chart. How do I get this thing out? of the way. Okay, I get this thing out of the way. Okay, this is the today, this is today, 15 minutes, okay, and as I was telling you, okay, the 6 to 8, that's why I like to do the 6 to 8. 6 o'clock is here, 8 o'clock is here. Tight range, it breaks out. Yesterday was a big move up, right? I mean, 2%, there was a very big move up, and then, but because of the tight range, which I like, 8 o'clock, it breaks down, okay. This is, yeah, 8 o'clock, it breaks down. Even if you trade after the 8 o'clock bar, okay, let's say you get in somewhere here, okay, even if you trade after, if it goes, it goes, as I was telling you. But of course, if you park it here, you don't get filled, the fellow go back up, you're safe. Okay, but if you get filled, you do get filled, you want to place your stop. Where will your stop be? Obviously, I will not put my stop right above the range top. I will just use this candle because it's quite a lengthy one. So I'll just use the top of this candle, save a couple more ticks or things like that. Okay lah, I feel happy by saving a little bit more. So you take the shot and yep, voila, it goes. Okay, so do look at it, check them out. It is still something that I do whenever I have a time. I got very quiet market, 6 to 8, then yeah, I look at this. But sometimes my morning hours can be quite busy as well. Okay, let's bring back all right, Q&A. I think we are in pretty good time. Is there any questions for me? Perhaps
Yes.
Yong Xuan, you can help me with this.
Okay, sure. So we have a few questions
Okay.
from Mr. Tanvi. So the first question will be, which are some good resources you use to catch up the economics?
Oh, there are so many of them actually. It really doesn't matter, I would say, because the thing about reading, okay, it's my own personal experience after all these years. So you don't read, you're uninformed. But when you start to read, you're misinformed. So that's the hard part. And mainstream media obviously is all agenda based and whatnot. So I don't really go mainstream media. So if you go on the net, and you just have to pick a few and then you read and compare. And because we are traders, so we are fairly good at reading between the line, right? The support and resistance. So same thing with the reading of the news and all this data and all that stuff. You read a few and then you find your own support and resistance level, which is the one that more coincide with your trade plans. Okay. Yeah.
Okay, so the next question will be, can you expand on the risk sentiment aspects and what that means? What's that means?
Risk sentiment. Okay. Risk sentiment basically is the trader sentiment. That means more so on the institution, the big boys and things like that, because then we are retail traders, individual traders. Okay, not for me, of course. I'm trading with a prop shop. So when you're on your own and things like that, you naturally want to follow the boys. I mean the big boys. So when you start to see risk sentiment, you want to see whether they are leaning towards more bearishness or more bullishness kind of thing. So if you see trades like, for those of you who know options, okay, and option is not my forte. So those of you who know options, if you see them buying more calls than puts, yeah, then you know the reason behind, because obviously they are hedging or they are just taking a view kind of thing. So again, this is always two sides. I mean, it's never, if they buy more call doesn't mean you'll definitely go bullish. Maybe they're just hedging their shorts or things like that, so they can be hedging. So yeah, things like this. So you want to read, and then if the currency, for that matter, the currency keep going one direction, it has been very quiet and suddenly it start going one direction, somebody is loading up on a currency or even a precious metal, somebody keep buying golds. Okay, there must have a reason why they buy gold. I mean, again, it's a hedge. So naturally they will feel that, okay, some risk, and that's where the term risk on risk off that you hear it on the mainstream media. Okay, this is a risk on environment. That means okay, risk on means you can actually go full swing and show hand, that kind of thing. Of course we don't show hand, but That's what risk on is mean. Risk off means okay, no more risk. Everybody go conservative, size down, stay hedged and fully hedged, that kind of thing. So yeah, that's the risk sentiment that you look out for, and it changes very quickly. And you guys are in Malaysia. I mean, I'm sure if you have traded palm oil, you know the kind of risk sentiment change on a 5 days basis. Yeah, every 5 days you got data release and then the sentiment change, something like that.
Okay, great. So we have another question by Mr. Wong, and we also have another question which was almost same as Mr. Ng lah. So
Okay.
do you use any other indicators such as MA, RSI, MACD, Supertrend, and etc.?
Okay, good question. As you see, my chart is fairly naked. So I do have MA. Like I say, I use 9-period MA for my trading time frame, and this you have to find your own style, whichever fit you. You can change the MA and go with your plan, switch again to test it out and see which one you're more comfortable with, which one that's more consistent for your plan. So that is what I can use. RSI, stochastic, MACD, all this I rarely use. I used to use that before, but when you have too many indicators, basically you confuse yourself, because one will tell you buy, the other one tell you sell. Then what should I do? Okay, I do nothing, sit on my hand. Then you got no trade. So as you see from the simple example that I show you, okay, when I research for the trade, I research it with the price flow. Basically, it's just the price flow, the sentiment and the price flow. If they are bearish, the price flow will actually shows you. If they want to take off, if they are bearish, they want to sell down, they will just sell down consecutively. They will just keep selling down. Okay, if they want to buy up, they will start to buy up. So if you take a long and then 15 minutes later it is still not going anywhere, 15 minutes later still not going anywhere, then you know your long could be a bit too early, because they are not ready to go long. So usually things like this is an indication, get up, restudy, reassess, and then go again. Yeah. So having said this, in terms of the earlier question on the resources for economic data, news, and fundamentals, okay, those are more fundamentals. For us, if we trade on a very short time frame and scalping and just swing intraday kind of things, the fundamental only has a view of the whole entire trend, whether will that be a change of trend in the making. Otherwise, technically already price in everything. So that's why you see some TA traders will tell you everything is in the price. You just look at the chart, everything is there. If it goes down, means something is bearish. If it goes up, means something is bullish, some news is bullish. And then the mainstream media, where they will come in by finding something that fit the bill. Okay, like if it's bearish, they will start to find topics or subject or words that people says that points towards bearish. Then it complete the story, and then you read it. That's why I say when you read, you become misinformed because you believe in it. And yeah, even you can write the analyst report and things like that, because there's always two sides. Somehow or other, you will get it right along the way. Okay.
Okay, great. So so we will have one last question. So
Sure.
this is by Mr. Fu. Based on your 15-minute scalping methodology, what is the statistical win rate? And can this methodology be applied all weather, or do you avoid certain days?
Okay, first point is the statistical win rates. Okay, I tell you honestly, I don't track it. Okay, because for us it's a little different. You should track it, but for us it's a little different, because why okay, the Philip guy has saw my screen, so I have it's 7 screen here technically. I have a lot of contract that I'm trading, so I won't be really track on the statistical point of view. But then I do need to back check. As I do my research, I need to see if there's a trend there, and I pick different period randomly, and then you see if there's a trend there, and then if does this 6 to 8 work only current time, or in the past it also worked when I was not trading it, there was also, it's already there, something like that. So I look into things like this rather than trying to find a win-loss ratio, because don't forget, as I said, we are all human, we are emotional. So to some extent, your trade plan, as much as we try to be disciplined, but sometimes we get naughty, and then we lose our sight, and you get disrupted, and you change your plan, kind of thing. All can happen. And so statistic doesn't really show. Even I tell you, okay, 100% sure make money, then you kena one loss trade, then how are you going to think? So you get yourself affected, basically. And what was the other part of the question, Yong Chun?
The second one will be, can this methodology be applied all weather?
All weather. Okay, good questions. All weather and period and things like that. Like I said, I will not, because 6 to 8, right? So technically, Asian hours 6 to 8, you don't get data releases from the US side. So yeah, you avoided all the data releases. And if you want to do it during the US hour, you need to restudy, because I don't do it there. And I already mentioned that I don't trade when there are data releases and all that, because I don't want to get whipped. No point. And also I am not any more younger, so those bold and daring and volatile trade is not for me anymore. My heart can't take it anymore. So I look for those that are slow and easy, and there's money to be made. So yeah, I can't really tell you if it's for all weathers, because I don't test on those volatile period. But if you look at it technically, I mean, yeah, volatile or not, you would still get the what do you call, the reversal pattern, the dojis and things like that. They are all there. But as it gets volatile, you may want to extend your time frame. You don't go for a 5-minute scalp, because if you do a 5-minute, 15-minute scalp or swing, because the lower time frame, there's always more noise as compared to the hourly chart or the daily chart. Okay, the only difference is if you take a daily chart, obviously your account has to be big enough to buffer your stop range, because usually they are quite wide. Okay, the bigger the time frame, the wider is your stop. So as long as your risk management on this part, the money management part is in place, plus the lot size is correct, then yeah, sure, you can do it. And it's a lot quieter. And once if you don't have to believe me, you just go and check. I mean, if you get a monthly chart, and it's a monthly chart, print a very nice hammer doji kind of things, you know the trend is going to turn. And if it's a reversal, it's really a reversal, because it's the whole month to print the candle. So those are super valid in that sense. But of course, can it still go wrong? Sure. One month go up, next month come down. It can happen. So this is where your risk management are coming, and this is where I also don't want to trade the bigger time frame. Okay, it seems easier to point it out. You see, very slow and easy, no noise and things like that. It doesn't gyrate too much. Yeah, sure, but then it takes longer to materialize your profit. I would trade, basically for us, basically what we do is we are more on a piecemeal. I don't mind picking up $5 here, $10 there, 50 here, 100 there, and I do hundreds and hundreds of trade in a day. So basically it all adds up. Yeah, so if I'm wrong, I get out. I'm wrong, I get out, because otherwise it hit me the other way as well. I can make 1,000. I can also lose a couple of thousand if I don't manage my risk and my stop well. All right.
All right. Thank you, Mr. Kenn. I think that will be
Welcome.
all for today.
Okay.
So to
Cool.
all the audience, if you have any questions, do contact us, and we are very happy to assist you. Last but not least, check out our website, and because we have ongoing promotion, and grab the opportunity to join it. With that, I will end the session for today. Thank you everyone for your time to join our webinar, and also many thanks to Mr. Kenn for this insightful sharing. Good night,
You're
everyone, and
welcome.
stay
My
safe.
pleasure. Yep.
Thank you,
Take
Mr.
care.
Kenn. Thank
Thank
you.
you. Bye bye.
Bye-bye.